All right. Well, thank you so much for joining us this afternoon. As a tax and wealth advisor, I'm able to help provide financial accounting services and guidance for our clients and help influence their financial lives. And whether we're working with a client that is getting ready to enter the workforce for the first time or somebody that's getting ready to retire, we're always asking them, what does your budget look like? And that's a question that we're always seeing. Also with me today from our office is Melissa. She's back here. So if you have any other questions when we wrap up, she can help with those. And if you have questions throughout the presentation, please let me know and interrupt me. We're going to take a look at why is a budget important and the role it can play in your life and things that we need to consider when we're looking to start a budget. And we're going to take a look at a suggested spending guide and look, where do we start? What are some key things that we need to look at? And what is everything going to look like when we put it all together? And we're going to have some tips and ideas. And why is a budget important? It provides us with a snapshot of where our money is going and where it is coming from. To quote John Maxwell, he says, "A budget is telling your money where to go instead of wondering where it went." I'm sure we've all had those months where you get paid and at the end of the month you're scratching your head saying, where did all my money go? What happened to this? By having a good understanding of our monthly expenses, allows for us to look for opportunities for ways to make changes and establish goals. Some of those goals may be to reduce our debt, establish and build an emergency fund, save for college or retirement, or potentially start your own business. And why is a budget important? It isn't about how much money you make, but it gets back to your spending. We can take a look at some of our professional athletes or some of our lottery winners or people that receive a large inheritance. A lot of times you see ESPN, such and such athlete filed for bankruptcy, and we all know they make thousands and millions of dollars. A lot of times that we see people that receive a large inheritance, most of that money is gone within 3 years of receiving that money. And we've worked with clients that have had over $2 million when they've been ready to retire. And we say, you have to cut back on your spending. This money is not going to last you during retirement. So it's not about your dollar amount. It's about how you spend that money. A budget allows us to try and stretch our monthly paycheck. And sometimes just by writing down what you spend your money on can be a very eye-opening experience. For example, if you look at spending $150 a month on cable over a year, that's equal to $1,800. And so that may be a little eye-opening experience to realize over a year you spend almost $2,000 a month on cable. A budget also hopefully will allow us to eliminate some stress and not look like this guy. And Dave Ramsey says, manage money works harder and gives you a sense of destiny and opportunity. So a few things to consider when we're setting up our budget is you want to establish a budget that allows you to use with ease and with the least amount of time. You don't want to create something that you're going to have to spend 3 hours a week dealing with, because more than likely you will not stick with it. And you want to keep it as simple as possible. You don't have to turn your budget in for a grade or anything like that. So unless that's something you just have to have with a bunch of charts and graphs and color coding, I would suggest keeping it as simple as you can. There is no right or wrong way to make a budget. And what works for one family may not work for another family. And what works for you during one time frame of your life may not work for you later on. I have 6 savings accounts. Some people think that's crazy. Other people think that's the most wonderful idea. So really it's just up to you and how you best work. When it's setting up your budget, you want to try and get everyone on your family on the same page. And financial decisions that impact the success of a family are jointly shared by the husband and wife. And in some situations, you may want to look at involving your children and getting them involved in the process. You personally would know your children best. I wouldn't probably show them the entire budget, but maybe you can make a goal saying, we only eat out one night a week, or let's reduce our grocery costs by X amount of dollars. And that money we save, we're going to put toward a family vacation or a pool, that type of thing. So getting your kids involved to some degree can help. And you want to know what your spending habits are and the spending habits of your spouse. And you may be finding yourself, if you have money in your account, you're going to spend it. And you may be looking to always be transferring money back between your checking and savings account. If that's the case, should we look at having a savings account at one bank and a checking account at another bank? Are you able to stick to a shopping list when you go to the store? And do you get tempted easily by deals of the day emails saying, one day only, here's this price for this item? And if you are, then maybe remove yourself from those emails. I know I can't go to Target and just get one thing. I have to look at every single thing in Target, so it's a good thing we don't have one in Stillwater. And budgets, I kind of feel sorry for them because they have such a bad name. People think by having a budget, it means you have to give up something and that it's very restrictive. So I encourage you to include something fun in your budget, whether that be date night or gifts or pampering for yourself, vacations. If you don't like the name budget and it just makes you shriek, and maybe consider calling it a savings and spending plan, or come up with another name for you to call it. We don't want to set ourselves up for failure and make our budget too restrictive. If you're used to eating lunch out every single day, maybe we look at eating lunch out 3 days a week, and then we move to 2 days and 1 day. And you don't want to completely cut yourself off cold turkey, or it's going to, unless you have the willpower, but if you cut yourself completely off, you may stick with the budget for 1 to 2 months, but then find yourself falling back into those old habits. We can start by taking small baby steps. And it may just be a difference of trying to save $5 a week and see where that gets you. One example would be making coffee at home versus making a Starbucks trip every day. At $3 a day for coffee over the year, that's $1,095. So that's something you can think about as a small change. Make your coffee at home. And over the long term, those small changes will make a big difference. And one of the big things is also to track your progress. If you are trying to save $5 a month, make sure that $5 is going into a savings account, and that you're using it to benefit yourself. And you'll see on one of your handouts, this is on the top part of it. This is a suggested spending guide. And this is, when I set this up, I was just making a guesstimate. This is based on your gross income, but when you look at setting up your own suggested spending guide, you're going to want to use your net amount, so what actually gets deposited into your account. And some of these are open to interpretation. Our housing could include property insurance as well as housing. Transportation can include car payment and maintenance. Your insurance down at the bottom, maybe that's where you put your car and home insurance in. So it's up to however you see fit and what works best for you. Our other category would be a good place to put our miscellaneous spendings, our oil changes that happen every 3 months, and back to school shopping, that type of thing, that are not a monthly occurrence. Where do we start when we're trying to set up our spending guide or our budget? The first step is we have to know our income. And remember, we want to use the net amount, the amount that gets put into our checking account. The next step we want to do is to pay ourselves first. And the suggested amount I have is 10%. And when we pay ourselves first, it allows us to make savings a priority. When we put money into savings at the end of the month after we've spent our money, then our savings kind of takes a back burner and it may or may not happen. So Warren Buffett says, do not save what is left after spending, but spend what is left after savings. Step 3, we want to determine our fixed expenses, and those are monthly expenses that are relatively stable throughout the year. Example, your mortgage, your utilities, your car, student loan payments. Another way to think about this are expenses that you receive a bill for in the mail. After you've determined the fixed expenses, then you want to take a look at the variable expenses. And these are expenses that change every month, and you have discretion over how you spend them, including your clothing, food, entertainment. Step 5 is to prioritize. You want to review all the fixed and variable expenses and determine if any adjustments need to be made. This is where we're going to separate our wants from our needs. And we're going to want to evaluate, take a look at your cell phone contract. Do you use your unlimited texting? Is that an expense you can cut out? Do you use the data plan that you have? Do you have the premium cable channels that maybe you only watch a couple football games on during the year? Are there places that we can make some adjustments at? And then step 6, we want to track the spending and review monthly. When we track our spending, we tend to notice if we have certain trends. Do we tend to, as soon as we get our paycheck, do we spend a whole bunch of money that next week, and then the remaining 2 weeks, are you just kind of hanging in there and you're counting down the days to the next paycheck? Maybe we should try and make it where you have a paycheck at the first of the month. Maybe you put a portion in that in savings, and then 2 weeks later you take that and make another paycheck for yourself from that savings account. Do we need to make any of the adjustments, cut back on spending? There are several ways and different methods you can use to track your spending. One is pen and paper, another is Excel. I know there are different apps for your cell phones that you can track them. We can go to Chris in IT and he can tell you the safe ways to use those apps. Make sure you're not compromising any of your personal information by using those apps. Step 7, we're going to determine our net income or our net loss at the end of each month. If you have a net income, you spent less than what you made. And with that extra money, are you wanting to save it? Is there something that you've been putting off purchasing until you had some additional money? Maybe we can make an extra debt payment with that extra money. Or at the end of the month, do we find that we spend more than what we brought in? And is this something that we had a whole bunch of random expenses that came up that we weren't anticipating, or is this a trend that we're commonly seeing? I heard the analogy about building a budget is similar to losing weight. To lose weight, you either increase your activity or decrease your calories. So in our case, if we are constantly seeing a net loss, if we increase our activity, maybe we need to look at opportunities to increase our income or decrease our expenses or decrease our calories. The bottom half of your worksheet is an example of a budget. It's not fancy at all, and it's probably about as simple as you can get. We have our income and our budgeted amount and our actual, and hopefully those are usually about the same. And then our fixed expenses, our variable expenses, and then at the end of the month, are we over or under? Some tips and ideas. Create your budget around your paydays and review your due dates for bills and set up reminders and auto payments. It's hard enough to create a budget and stick with it, but then if you find yourself constantly paying late fees and overdraft fees, then that makes it even harder. For example, I know some people with OSU get paid every other week, is that right? And then some get paid at the last day of the month. If I already get paid on the last day of the month, then I would basically set up all my bills to be paid the very next day. So that way all of my fixed expenses are covered for the month and they're out of the way. If in your household you have 2 or 3 or 4 paydays between you and your spouse, maybe look at taking your mortgage payment, for example, which is most people's largest expense. If you get paid 4 times, divide your mortgage payment up by 4, and each paycheck you have a portion of that go to a savings account and have your mortgage taken out of that savings account. And another way you can use this is what I call a modified check register. Use Excel and show on this day of the month I get paid, here's the bills that are going to get paid for this, here's my discretion money till the next paycheck, here's our next payday, here's the expenses with that. And that can let you see, I would set it up for the whole month, so that way you have a preview over what everything's going to look like. And let's say the third paid period, maybe you only have $200 there after you've paid expenses, so you can kind of know it's going to be tighter at the end of the month. I need to control my spending at the beginning of the month. You may want to look at dividing your fixed expenses and variable expenses into 2 checking accounts or multiple savings accounts. That's what we kind of touched on with the mortgage payment, looking at dividing that. There are some families that will divide all of their fixed expenses and have those paid out of a separate account altogether. When trying to determine how to budget for utilities, for example, your cooling bill for July and August, that's probably one of the highest numbers that you have. So I would always use the highest number when creating a budget, and you'll be under in January and February, but that lets you prepare for the worst case situation if you use those highest numbers. When you're making variable purchases, think of in terms of how many working hours your purchase is equal to. So for example, if you get paid $15 an hour and you're looking at buying something that's $150, is that worth you working 10 hours to buy that, to make that purchase? And you may say, no, that is not worth 10 hours of my working time, and you don't make that purchase. And you want to try and designate a certain day and time each week to update your spending guide or your budget. And it's easier to review where you're at on a weekly basis versus instead of looking at it at the end of the month. If we wait till the end of the month, we can't make any changes, and you'll probably be frustrated and say, oh no, my budget doesn't work, and throw it out the window and not continue to work at it. And another idea is to work to condition yourself to a larger expense or lower income during the upcoming year. For example, if you know you're going to have a daycare expense later in the year, or if you are going to have a child that's going to be driving sometime, or you're going to be going back to school and knowing in the future our income's going to be lower or we're going to have a greater expense, start conditioning yourself to get used to that lower cash available for your spending. So to review, Remember that small changes can make a big difference over the long term. Think back to our Starbucks example, almost $1,000 extra a year. Don't try to overcomplicate your budget. Start just by tracking your expenses and setting realistic goals. And don't be afraid to ask people for ideas and suggestions on how they make their budget work. So, do I have any questions?
I have one question.
Yes.
You said you had 6 savings accounts. Do you set those savings accounts for specific things?
Yes.
Is that why you got these 6, that maybe you're saving for this, or use it for your house payment or something like that?
That started for us right after we first got married, and we had several things we were trying to save for. We knew we were going to need a new car in the future, eventually buy a house, eventually start a family, save for vacations, Christmas, and then an emergency fund. So for us, that was just easier to know this dedicated account is our fund money. This is what we can plan for our vacation. This is our serious set aside money for our future down payment on our house. That's just how it worked for us, having those marked differently. For some people, they say, I don't want to keep track of all that. I just want to throw it all together in one account. But that was why that came about, was to help us separate what we were saving for. All right. Well, I have my business cards up here if you think of any questions, and my information is on the paper as well. So you're more than welcome to email me, call me, anything like that if you have questions. When you get home, if you talk to your spouse about it and you're like, I should have asked that question, I'm available to answer those whenever you do have those questions. So thank you very much.
Thank you.